Ride today, all right? You wouldn't know it by looking at the stock market chart of the SPY. We're about to take a peek at that. But there are a bunch of stories coming out, mostly regarding Russia and some regarding the Fed, that are more FUD-based. They're a little bit more fearful stories. We're going to cover a decent chunk of those today, talk about what I think about what people should be doing, just my personal opinion, not financial advice, of course, but we're going to get into that in just a little bit. First, we will just very briefly cover what's going on in the stock market. We're pretty flat. We are moving up just a little bit. We had a bumpy ride yesterday as well. And we did end up making, I believe, newish lows in the most recent downtrend, but not overall lows in the big downtrend that we've been in, right? So the lowest we've gotten on this whole thing, in fact, we'll pull out the yearly chart in the SPY for this, was around 420 bucks, and we got around to 425 yesterday. So we haven't made new lows, but we're potentially on the way. Currently, we're sitting around 430. We're actually above 430, around 433. And hopefully we're not going too much lower. Now, you never know, because there's a lot of fear out there. There's a ton of people who are complaining about what's going on in Russia. They're talking about the invasion. They're talking about supply chain issues. They're talking about massive inflation. They're talking about federal interest rate hikes. And it's a lot to think about. It's a lot to get worried about. But we're going to talk in a little bit about what I think people could potentially be doing to benefit over the long term from this kind of a situation, and big mistakes that people often make when they're investing. And when they see all of this fear-based stuff, we're going to talk about some of those. So we will also cover briefly, and probably towards the middle, maybe when the market opens, we'll start talking a little bit more about DWAC, which had a good day overall, right? They were up yesterday, up decently. Not as great as it could have been, not as good as they were at the highs in the pre-market of 138 bucks. I bet people want to see us get back there, and maybe we will sometime in the near future. We'll have to see about it, but we'll probably talk more about DWAC once the market opens. Now, good morning, everybody. Rocky Mountain Gobblers, Matt, Shadow Girl, Tong, Adrian, Squirrely, Quaid, and Ryan. Good morning, guys. Welcome. So, we've got the first story of the day, and it ties in two really FUD-based things, two things that people are very fearful of in the stock market. It says, Russia's Ukraine incursion could complicate the Federal Reserve's interest rate decision. So that's two big things that people are worried about. They're worried about Russia's invasion of Ukraine and the Federal Reserve's interest rate decisions. Now, this article overall actually says that maybe because Russia's invading Ukraine, or is potentially invading Ukraine. You know, not everyone says they are. Some people say they're just going into some, terrorist zones and taking out and making these rebels independent or something like that. And the Federal Reserve may react to it and decide not to raise interest rates. Now, they're saying the reason why is because Russia doing this is creating a bit of inflation. It's causing a bit of increasing prices in some key things, specifically oil, right? They say the price of oil matters the most because crude oil prices can drive up inflation and slow down the global economy. And they're saying that what happens to oil could determine what the Fed does if they continue at a brisk pace of hiking interest rates, or if they decide to slow the pace down due to growth concerns. Now, they might do this because they're seeing the price of oil go up dramatically. And you can see Brent crude futures, basically oil prices year to date, all right? This isn't over the course of years. This is from January 2nd to where we are now, so not even 2 months of price increases, and we've already gone from about 78 to 96. So we've gone up quite a bit price-wise for oil. So oil is getting very expensive. I'm sure you guys know that. If you filled up your car with gas at any point in the past month, you know that oil is quite expensive. And, a lot of people were hoping that oil would be going down over the course of 2022 because it's only been getting more and more expensive over the past year, just about. It's just been climbing and climbing and climbing. And it seems like every month I'm more and more disappointed every time I go to fill up my car. And instead of getting cheaper, it's just even more expensive. So it's actually getting kind of crazy. Now, what this economist, Kasman, expects the Fed will do, he says he expects the Fed will proceed with a quarter-point increase in the federal funds rate in March. Now, previously, people were expecting a half-point hike in rates, so a 0.5% instead of a 0.25%. And we'll see what we actually get. And then a funny part of his forecast is that he forecasts 6 more rate hikes over the balance of the year. And I find this a little comical because, these economists who like to forecast the amount of rate hikes, it's like they wish and wash and change their forecasts at the drop of a hat. It's like every day they're changing their forecasts. I remember when we first started talking about rate hikes, the economists were saying, oh, it'll probably be 4 rate hikes. And then they moved it to 5. And then when we thought things were going to get really bad, they moved it to 8. And now they're talking about 6. So, I mean, what's the point almost of forecasting these rate hikes if you're just going to change it every day as we get closer and closer to the actual rate hike? So, it's a little silly in my opinion. In my opinion on these rate hike increases is I tend to think the Fed isn't going to do that many. That's just my opinion. I haven't really changed it. I think that the Fed doesn't want to cause a big slowdown and a big crash in stock prices. I think that there's a lot of government debt out there. They know that the government can only afford to pay a certain amount of interest on that debt. They know that there's not just government debt, but a ton of debt. People are in massive amounts of debt out there, and nobody wants to be paying too much more interest on their debt. Now, we are going to be talking about probably halfway through this stream another thing that's being affected by these interest rate hikes. If you're interested in the housing market, then you might care to stick around for that, but we'll get to that eventually. And we will, just very briefly, since we're talking about the Fed at this point, we will look at inflation. And currently you can see that we are on the rise. Now, we've looked at this chart quite a bit, and the scary thing about this chart is that the last reading that we got was in January, and that hasn't factored in a lot of these Russia price increases, because we have certainly seen increases in the price of gas and oil, and that actually translates into all things, kind of like what this article that we were just looking at was saying. The price of oil matters the most because that can drive up inflation overall. Reason being, pretty much everything that we consume is either produced or transported with oil, right? You're using trucks and all kinds of factory equipment to produce and transport goods. And so an increase in the cost of oil ends up translating into everything being more expensive for companies to sell to you. And so you might expect to see some more inflation, not just in the price of gas, which is part of the CPI, but also in the price of everyday goods and all kinds of stuff. Even just going to work is going to cost you more, right? You're going to be spending more on gas going to work, and so you're going to probably want to get paid a little bit more if you're a traveling salesman, or you're doing some kind of job with travel where you fix stuff. You're an electrician, a plumber, or an engineer who's going to other people's companies. You're going to be spending more on gas. Your company's going to be spending more on gas. There's all kinds of inefficiencies that arise when gas prices go up, and everything overall becomes a little bit more expensive. So it's almost like a fun game that Russia is playing with us. Who knows why they decided right now was the right time to do this whole thing in Ukraine, but it's certainly having a negative impact on us because we're already worried about inflation. The Federal Reserve is already trying to slow down inflation. They're trying to taper it and get their own stimulus programs kind of coming to an end and raising interest rates. And Russia's certainly turning up the heat, right? They're putting quite a bit of pressure on the U.S. economy by creating these inflationary pressures. And it's kind of reminiscent, in my opinion, of what the United States did to the Soviet Union right before they collapsed. Because, I'm not a history buff or anything, but my understanding of how the Soviet Union collapsed is, I believe it was Reagan was president at the time. And the United States and the Soviet Union were going through the Cold War, right? We didn't like each other. We were going through the Cold War. And the story that I've always heard is Reagan started spending a ton of money on the military, ramping it up. Soviet Union, they were already going through some tough times. And to match Reagan and match the United States, the Soviet Union decided to increase military spending a ton. And eventually the whole thing just became unstable and they collapsed because they couldn't keep up with the U.S. and there was a collapse. That's my very vague understanding of it. I'm sure there's a whole lot more to it than that. But that's kind of reminiscent of what's going on right now, where the United States going through a bit of a tough time, hopefully not as tough as what the Soviet Union was going through, but there is a potential situation where they are putting some pressure on us and doing it purposefully and trying to ramp up inflation. And it's going to be interesting to see what the Federal Reserve will do with these interest rates, because a lot of people are expecting them to get pretty high, not nearly as high as what they've been in the past, right? If this economist is expecting 6 interest rate hikes at a quarter point each, which I think, where do we have that? He said somewhere around here. Yeah, so 6 interest rate hikes at a quarter point each. That would actually be a 1.5% interest rate at the end of it. Maybe 1 or 2 of those rate hikes will be a 0.5%, and it gets up to 2%, but that's still lower than what we were doing in 2006. That's still less than half of what we were doing in 2006. In 1996, it was only recently in the past 20 years or so that we really started lowering interest rates and getting near zero interest rates. So regardless of how much we raise it, unless we raise it an absolutely monumental amount that no one is expecting, I don't think we're going to see interest rates get that high, historically speaking. I think that they're still going to remain pretty darn low. And, I don't think the Fed is prepared to really hamper the market and put us through a tough time. I think that we're already seeing a bit of a tough time in the market. The last thing that the Federal Reserve wants is to crash the stock market, because that's all they've really succeeded in doing and helping over the past 2 years, right? During the pandemic, we were crashing pretty hard, and all they've really succeeded in doing at the Fed is moving the stock market up. So do they want to crash that to end the problem of inflation that they technically started by printing all that money? I don't think they do. But we will talk a little bit more about Russia now. And it's not good news, all right? Russia is evacuating their embassy in Ukraine, and Ukraine is recommending that their citizens leave Russia. So Russia began evacuating its embassy in Kiev, and Ukraine urged its citizens to leave Russia on Wednesday as the region braced for further confrontation after President Putin received authorization to use military force outside his country, and the West responded with sanctions. So it's not looking like a pretty situation in Ukraine. It looks like both of these countries are starting to take things a little bit more seriously than they had. Russia's getting their people out of the embassy. Ukraine is telling everyone to get out of Russia, and it's a scary situation. Could we actually be going into some kind of conflict? Well, a lot of people say we've already started a conflict. They say that when Russia crossed a red line, right? They crossed the line and put troops into the Ukrainian border, I suppose, into 2 rebel areas, and said that they were separatist regions. And some people are calling that an invasion. They say the invasion's already begun. We're going to see what the United States does, how the United States reacts, if the United States is going to war with Russia. We'll see if Biden has the stomach for it, if he wants to do that, or if we'll just let this kind of pitter out and just let whatever happens happen. It'll be interesting to see. Overall, I don't think that things are going to heat up too much between Russia and the United States. I just don't see too high of a likelihood. I mean, there's always a chance. There's always a chance. I don't want to say it's impossible that the United States and Russia could be firing at each other on the battlefield, but it doesn't seem like too likely of a scenario that either of these countries would let that happen. I think someone would step back before that actually happened and kind of roll over for the other one. We'll see who that ends up being. It looks like Putin doesn't want to step down. Putin really wants these separatist regions. I think he really wants Ukraine. And we're going to see what happens. It'll be an interesting adventure to be on. And overall, it will be beneficial for stock prices over the long term, right? And I don't mean that we're going to see a big boost from it, but I mean we're going to see anyone who's buying stocks while we're in the dumps from this whole situation could be getting stocks on the cheap. It could be very good for people who are getting these stocks to be getting them on the cheap during all of this conflict. And typically, these kinds of conflicts, even wars, even big wars, can cause temporary decreases in stock price. But over the long term, if you look at the long term of any stock market chart, stocks tend to go up pretty dramatically. I know this doesn't have any major wars in the past 27 years, but I don't expect this to become World War III. I mean, it's possible. If that did happen, then obviously we could be in some trouble for a significant period of time. But over the long term, guys, if you're worried about the long term, and I'm talking about 20 plus years, even a war isn't going to completely decimate your stock market over the course of 20 years, right? You might see a low for a year or 2 or 3, but I don't even expect that to happen. I think that would be an extremely unlikely situation where we actually see real detrimental effects in the United States. And we're going to talk about another reason why we might not be seeing too many bad effects in the United States, but the rest of the world might see some negativeness. Now, we have this story, unfortunately. We'll pull this back up. How a Russian invasion of Ukraine, the breadbasket of Europe, could hit supply chains. So people are worried that supply chains are going to be dramatically influenced by Russia's potential invasion and just the whole conflict going on there. Now, we've already talked about oil. Oil's obviously been going up in value. You guys can see that at the gas pumps. Something that you guys might not know, though, and that I wasn't even aware of until reading this, is that Russia is also the world's top wheat exporter. together with Ukraine, both account for roughly 29% of the global wheat export market. Now, reading that at first glance, you might think, oh boy, we're in big trouble. If they're producing 29% and that whole region goes under and they're no longer sending that out, the U.S. is in big trouble. Wheat's about to get really expensive. We're not going to have enough food, and you might be really worried about that. However, what you have to realize is that the United States also produces a bunch of wheat. And if we actually go to this U.S. Foods Imports page right here from the Economic Research Service, the U.S. Department of Agriculture, you can actually pull up this little Excel file, which I've already opened and found the relevant slides on right here. You can see that Russia, our imports from Russia, and I believe this is food in millions of tons or something, over the course of the past decade or so. In 2017, we were only importing about 526 units, whatever this chart is in terms of however many tons of food or millions of tons of food, whatever it is. We only imported 526 from Russia, and from Ukraine, we only imported, where is it, right here, 113 from Ukraine, and from Mexico, we import 26,000, and then 23,000 from Canada. So overall, it's not the most worrying situation. We overall don't get all that much food from Russia and Ukraine, it seems. So this could be a big problem for other places. Specifically, this article mentioned Germany would be hit especially hard, right? Germany's pretty close to Russia and Ukraine, so it doesn't surprise me to see that they get a decent amount of their food and maybe other things like metals and other commodities from them. But China also is a big recipient of Ukrainian corn. In fact, Ukraine replaced the U.S. as China's top corn supplier in 2021. So China is, that's another interesting just tidbit right there, that China is pivoting away from the U.S. They don't want to use the U.S. corn. They want the Ukrainian corn. And looks like China's just been guzzling up Ukrainian corn. So we're going to see what China thinks about this whole conflict. If they like the idea of Russia moving into Ukraine, disrupting this supply chain potentially for them. I know that, the president of Russia, Putin, and president of China have talked, right? They talked during the beginning of this whole conflict, and overall, it seemed like they were working together a little bit, right? China said they would have Russia's back, and it's not the most simple situation because you can see that China is getting a lot of Ukrainian corn, so that's a big trade partner of theirs, and it's going to be interesting to see what they end up doing about this whole thing. But it is notable that, there could be some increases in prices. In fact, if you look at the chart for the prices of wheat and corn traded in Chicago, they have actually been increasing as of late. They've been increasing for many months, but they have been increasing, right? So some of this is just overall inflation, but some of this, probably the most recent little spike that we've seen over the past couple of days or weeks, some of it's maybe tied to Russia, right? Tied to the Russia situation. A lot of people might be expecting that if Ukraine and Russia, which produce a lot of wheat and corn, stop producing as much, then maybe the corn we've got here will be more valuable. So we'll see how that ends up impacting the corn trade. I don't know if any people out there have ever bought into corn futures or wheat futures or anything like that. I have not. I've not personally done that, but it's an interesting possibility. Some people might have done it. Some people might be interested in it. And before we move on to the next story, I would request, if anyone is interested in hitting that like button, that would be very much appreciated. We could potentially get up to 30, maybe 40 likes. I know, it's not the easiest thing. You got to go down and hit the button, and it's not the most pleasant, but it really does help out the algorithm a little bit. It is helpful for getting the stream out to a couple more people and just showing interest. It's nice. So if anyone wants to go and do that, it would be much appreciated. Now, the next thing that we've got to talk about, I think people are going to be pretty happy about this. I can't imagine anyone being unhappy about this story unless you're producing, unless you're maybe making masks, right? That's the only kind of business or person who I think would be unhappy with this story right here. So COVID infections plummet 90% from U.S. pandemic highs. States lift mask mandates, and that is very interesting. My school even has just announced, I just got the email yesterday, I believe it was, that we don't have to wear masks indoors anymore. So really cool stuff. It looks like we might really be at the end of this thing. And you can actually see this little blurb that I've highlighted right here. U.S. and state leaders are trying to mentally move past the crisis that is gripping everyone since the pandemic began 2 years ago. So it looks like the government leaders are finally mentally moving past this. They're finally able to mentally move past it. And I think that a lot of people may have mentally moved past it already. A lot of people may have been done with it, right? They might have figured, oh, it's done, it's over. And they may have mentally moved past it, but then they probably had a little reminder. Every time they went into stores and saw everybody wearing masks, they looked down at their own face, they realized they were wearing a mask. And it made it a little bit tough to mentally move past it. But it looks like the state leaders are finally ready. So they're trying to mentally move past it. Hopefully they'll be able to, right? They're trying. That's the key word here. They're trying to mentally move past it. And maybe we'll see the end of this if they decide they can. And maybe they'll release some of these restrictions, right? They'll end some of these restrictions and whatnot. So we'll see if that ends up happening. But overall, in the area that I'm in, it seems like a lot of those restrictions are going away. So that is probably good news for anyone who's interested in this whole situation, for anyone who's been, going around wearing this mask for the past 2 years. They're probably excited to see that, it looks like from just the overall view of things, we might be getting to the end of this. And of course, we'll take a peek at the case counts because the case counts are on the decline. The case counts are plummeting as of late. Now, we had a massive spike during January, and we've just been on a steady decline. It looks like a lot of people got natural immunity potentially, and that could be having a real impact. I don't know. I'm not a doctor, but it seems like that could be having an impact. And we are on a big decline. A lot of people got this very contagious variant, and now we'll see, where we go, where we bottom out. If we bottom out close to zero, that would be nice. I wouldn't mind seeing us bottom out close to zero, but already we have the very initial data from Monday, and you can see this bar right here. The new cases is 61,000, and that's on Monday. Now, typically what we were seeing just back in even near the lows of where we were in October, it was, some of the lower days were 70,000. So we're already much lower, starting out the week at least, than where we were. We're going to see what happens with it. Oftentimes Mondays, actually, if you look back at the past, are some of the most some of the highest testing days. A lot of people, it looks like, don't get tested on the weekends. They end up waiting until Monday when they go into work and they maybe have a mandatory testing requirement. You see spikes at the beginning of these weeks on Mondays. So maybe this is the high of the week, and maybe we're going to be much, much lower. That would be the hope. That will certainly be good. It's very interesting to see. It's very interesting to see that we are having the state leaders trying to move past this thing. That almost tells a scary story about, man, do they really need the economy to start ramping up again? Do they need things to start getting better because we might be in a tough situation economically? They need to have some more energy injected into the economy. They might need that. It could be a worrying thing for them to see the economy slowing down, and maybe they want to inject some energy into the economy by releasing all of these restrictions, getting rid of all this stuff that we've been doing over the past couple of months. And it could be interesting to see if that's the case, right? That's a somewhat scary theory that I've got, but it's a potential situation. So hopefully nothing too bad is going on in the overall economy. I know people are worried about Russia and interest rate hikes, but hopefully we can get some good earnings seasons coming up in the future. We'll see about that, though. Now, the next thing we've got to talk about, our favorite guy. We've got our favorite guy, and maybe we'll have him on one of these live streams one day. We might have to have him on. I don't know if he'll say yes, but he's been dying to get onto another speaking event. He's been dying to get into the White House. He wants to speak at the White House, but Biden does not want him to. And we're talking about Elon Musk, so maybe he'll come on to our show and talk with us. Probably not. That would be cool, but I don't think so. The title of this says, Elon Musk accuses Biden of ignoring Tesla, but says he would do the right thing if invited to the White House. So he wants to get to the White House. He's feeling a little unsure of the current administration's views towards Tesla, to say the least, right? He's not actually too unsure. He thinks that the current administration, he thinks Biden does not like him. Okay? He said that he accused President Biden of ignoring his company in favor of paying more attention to legacy automakers. And we've got an interesting statistic regarding this we'll take a peek at in a second. But he said he also sought to assure White House officials who are concerned that he would do or say something embarrassing if he were invited to speak at a White House event. He said, they have nothing to worry about. I would do the right thing. Now, that's a little vague, right? It's a little vague, a little ominous. I would do the right thing. It could mean a lot of things, right? It could mean he's going to say something really embarrassing. Who knows what he thinks the right thing is in that situation? But it probably means he wouldn't do anything too bad or say anything too bad while he's there. He probably doesn't want the current administration to really have a reason to hate him. So, one thing that he did say in this email, where he was complaining about Biden not recognizing Tesla as much as they should, is he said the notion of a feud is not quite right. Biden has pointedly ignored Tesla at every turn and falsely stated to the public that GM leads the electric car industry, when in fact Tesla produced over 300,000 electric vehicles last quarter and GM produced 26. So it is kind of crazy to think that Biden would say that GM leads the electric car industry, because who actually thinks that? I mean, who even thinks? I don't even know of any GM electric car, right? I didn't even know GM made electric cars. I'm sure that they do, but I didn't even know that, right? I'd have thought maybe he could say Ford or anyone else. I mean, GM, I mean, that's completely ridiculous. But the fact that GM produced 26 electric vehicles last quarter and Tesla produced 300,000, it's just completely ridiculous to hear Biden saying this stuff. And I can completely understand where Elon Musk is coming from. It makes no sense, right? It does not look good for Biden if you're Elon Musk and you're looking at this situation and seeing some of the potential unfairness that's being directed towards your company, towards a great company that's doing a lot of innovative things and is, at the end of the day, really helping out not just the U.S. economy, but the world at large, right? If we're moving towards electric vehicles and solar power, I think that's the right direction to be taking things. Thank you, Elon Musk. And Biden, you should really recognize Elon. Take him to the White House, give him a nice dinner, and do all of that stuff, right? I think that would be the right thing to do. And we'll see if that actually happens. Hopefully it will. But you never know what's going to go on in these kinds of situations, right? You never know. And hopefully we'll see the right thing happening sometime soon. But it's tough to say. It's tough to say if we'll do the right thing. But now we will move on a little bit to mortgage rates and applications. And this all has to do with the federal funds rate, right? The federal funds rate is affecting the housing market. Now, if you guys are interested in the housing market, if you guys are looking at buying a house, if you recently bought a house, or if you're planning on buying a house, then this could be important for you, okay? Mortgage applications dropped to lowest level in over 2 years. So very few people are actually requesting mortgages right now, okay? Total mortgage applications decreased 13.1% last week to the lowest level since December 2019. Now, there is a potential reason for this, right? A lot of people are worried about increasing interest rates, and we have seen some interest rate increases prematurely in the mortgage market, but a lot of people are potentially not wanting to buy a house right now. We're seeing a lot of fears about inflation. People might think that the housing market is at a peak, and they're probably worried, right? A lot of the investors who are buying houses as investments are probably worried that as we actually see interest rates increase, we could see large decreases in housing prices. Now, the reason they're worried about this is because, and we're already seeing the beginning of this with these mortgage applications dropping, is as interest rates increase, there are fewer people who are out there who want to take out loans on these houses, right? Because right now, if you can get a very low interest rate, you take out most of the mortgage, you buy a house, you have a big incentive to do that because you're paying very little interest, then you can rent it out, you can collect positive cash flow from that. But if the interest rates go up enough, then you're no longer going to be able to collect a positive cash flow from buying that house with a large amount of debt on it, right? You wouldn't be able to afford that. It would end up being a situation where you wouldn't want to buy the house. In fact, you'd be, losing money essentially every month that you were owning that house. And housing prices do tend to go down, and a somewhat significant amount when interest rates hike. And we'll take a peek at that. We'll pull up the stock market real quick just so that we don't miss the open. But here, let me pull this up. Okay, so this might give us what we want. There is some statistic. Some statistic says like a 1%. Let's see if we can find it like that. No, well, there was some statistic that I had seen at some point that a 1% increase in interest rates correlates to about a 10% decrease in housing prices. So it's an interesting statistic, but overall, we just opened. So we're going to maybe come back to that story, maybe talk a little bit more about it, but we will start paying more attention to the markets now that we've got stocks going somewhere. So S&P and a lot of things actually are quite green. Now the S&P is up 0.75, the QQQ, some more tech-based stocks, up 1%, and the Russell's up 0.5%. Unfortunately, the small caps aren't doing quite as well, but they're doing decently. It looks like, what is this? Sundial's up 3%, recovering a little bit after the big move down that they had yesterday. It was not a pretty day for Sundial. Over the course of yesterday, you can see they did move down during the after hours and pre-market quite a bit, and it looks like they found some support at 53 cents. So good stuff all around. Hopefully they won't break through that today. And we'll pull back up the market. But DWAC has been playing around $90 for the past 24 hours or so now, right? They pumped up in the pre-market, and then pretty much as soon as the trading day began, they started playing around the $90 level. And they've just been doing that pretty consistently throughout the course of yesterday. There was rarely, an hour where they weren't at least touching $90. And it looks like we're somewhat continuing that today, right? We just touched it, and it looks like we're bouncing down off of it. And we'll see what happens with this. Now, I know a lot of people are excited that Truth Social is launched on the App Store, and certainly that is reason to celebrate. Now, unfortunately, it's not like it was an out-of-the-blue, unexpected event, right? A lot of people, saw it coming. A lot of people knew that was the day. We'd been talking about it on the channel for a while, and we did see a decent increase in price from that point, right? Currently, even now, we're up. We are currently up from where we closed the day prior. We're up about 7%, it looks like. Yeah, we're up about 7%, and at our highs, we were up 60%. So there was certainly an opportunity to make some money if you were up at 4 in the morning selling DWAC. But all in all, looks like it will be a good thing for DWAC. We'll end up seeing some higher prices, right? We're up 7% still. And it looks like we're seeing some bullish price action today. We've certainly got a lot more attention focused on DWAC stock. If you look at the Google Trends chart over the past week, you can see that 7 days ago we were not ranking that highly on search, right? Not too many people were searching for DWAC, and we did see a massive boost on the first trading day for DWAC stock. A ton of people started looking into DWAC. We did see that big pump up to $138 during the pre-market. A ton of people were looking into the stock. And even today, we're trending higher than where we typically were the week prior. So even now, there's still a bit more attention being placed on DWAC. People maybe realize the potential it has, especially as we start getting some numbers out. As soon as we actually start figuring out how many people have signed up for this thing, and how many people are going to sign up once there's a web version, once there's an Android version, once it's available internationally. There could really be quite a few users. And the beauty of a tech company is that they can grow incredibly quickly. And especially when they have a massive audience like this, it's almost as if it's an unprecedented event, right? Rarely, I can't think of another example where there's been a tech company that started up a social media venture like this, where there's already a massive audience of tens of millions of people. Just in the United States alone, who want to use it and who will be potential customers for it. I mean, usually you have to start off as a social media company. It's somewhat slow, and you put in years and years of effort trying to grow the platform, and eventually it takes off in a big way and spreads a lot, and then you have a big payday. But DWAC and Truth Social, it's a bit of a different story, right? You're looking at a situation where there's already a massive following, and it's obviously an unprecedented situation looking at the long-term chart. When this thing debuted, people knew it had a massive following, and that's why it pumped up instantly, and why we're continuing to pump up as we start getting more and more, not necessarily guidance, but more of a clear vision of what's going to happen as we start getting the platform coming out. It's going to be interesting to see how many users we have signed up. I mean, I will say that yesterday they had to put people on wait lists. There were so many users. I know you guys probably knew that if you were watching the stream yesterday, but they had to put people on wait lists. There were error messages because there were just so many people signing up for this thing. So it really is a nearly unprecedented amount of users that we're seeing for this. So it'll be really interesting to see what numbers we get coming out in a couple of weeks or months, whenever they decide to release how many new users and signups and downloads they've got. That'll be very curious to see. That'll probably, in my opinion, that could have a very beneficial impact on the stock price. Maybe some of the bears will realize that there might be a little something to DWAC. They might realize maybe I shouldn't be shorting this thing when it has a couple million users signing up the first day and millions more in the weeks after. And we'll pull up the short interest for those who are curious about it. We'll pull this up and let's see this. So the short interest on DWAC, look at that. It is actually, you can see over the past month or so, it's been decreasing. So since near the end of January, we have been on the decline, and we just declined by a couple 100,000 shares over the past day or so. So we are seeing a decrease in shorts. Some shorts are deciding to get out of this one, and potentially a wise move, right? They're looking at this thing getting closer to the all-time highs that it's been at, and there is certainly a lot of hype that can be generated around this, and pretty quickly we've seen in the past. This thing has the potential to move up in dramatic and violent ways, so we'll see what happens with it. Hopefully good stuff. Now, Sundial up 4%, happy to see it. You know, we're just bobbing around with Sundial. We're just waiting for the day when we really start taking legalization seriously, and I think that we already would have started taking legalization a little bit more seriously were there not so many massive macroeconomic events scaring the bejesus out of people. You know, everybody's worried about inflation. Everybody's worried about the Fed raising interest rates. And now everybody is horrified about what's going on in Russia and Ukraine. And to be fair, they keep giving us reason to be horrified, right? They really do give us a lot of reason to be horrified, with Russia evacuating its embassy, Ukraine telling all of its citizens to leave, Russia moving troops into those two whatever they call it, separatist zones. It's really scary stuff to see, and I completely understand why people are selling, right? They're selling, they're worried that something bad is going to happen. However, in my opinion, that is potentially a big blunder that people are making, and we've looked at this before. We'll look at a couple of things, all right? We'll pull this chart up. This is a self-drawn chart, and you guys have seen it before. Unfortunately, you know, a lot of people end up getting worried that there is going to be a big war or a big catastrophe, and they're looking at a situation where that would probably cause a decrease in stock price. Now, unfortunately for them, the increase in risk is already here. We've already seen a sizable decrease in price, and if you don't believe it, take a look at this. Take a look at this. If you don't believe that we've seen a sizable decrease in price already, then take a peek. Take a peek at this. So this is something that we posted to the locals community the other day. And this, you know, the locals community, if anyone wants to check it out, link in description. This is, I mean, it's free. You can just look at this stuff, right? This is a free thing that we posted. You can just view it. Anyone can just see it in their feed. Anyone who's following the thing, at least, and it doesn't cost anything to follow the locals community, but 72 stocks down 65% plus. So I said an interesting post from Twitter, which tells the story of how many people's accounts are looking at the moment. Are all of these companies going bankrupt, or will some of them make a comeback, eventually reaching new highs? And just for reference, a company down 75% would need to 4x just to reach its previous high. Now, these are a ton of companies, and sure, some of them, you look at them, and they're meme stocks, they're Reddit stocks that got pumped up potentially higher than they should have been at the time. Robinhood, right? That certainly got a Reddit boost. But some of them are legitimate companies, right? Some of them, at least, are legitimate companies. And a lot of these stocks, a ton of stocks, are down massively. All of these on the list, all 72, are down 65% plus. And this isn't even every stock that's down, right? This is just some stocks that are down. But you're seeing a lot. I mean, a ton of stocks are down in a massive way. Now, what that means is, well, there's a couple of reasons, right? Expected return for these stocks was, at one point, I will say, a whole lot higher. People expected these stocks to go to the moon because they were going to make such great numbers, and there was so much money being injected into the economy that expected return was very high at that time, and you did end up seeing, when we had high expected return, high price as well. That's gone down a little bit. We've gotten a little bit back more into reality. We've started to look at this from a different perspective where, okay, expected return, it's normalized a little bit. But that's not the main reason why prices went way down. A lot of what we're seeing right now is people started getting very worried about inflation and started fleeing a lot of the small market cap stocks. As risk went up for inflation over the course of the year, as we saw a big decline in a lot of small market cap stocks, not just over the course of the year, but actually from November, where we were at our highs of 244 to where we are currently. This is the Russells. This isn't even the smallest of the smallest market cap stocks. We're down about 20%. At our lows, we were down 22%. And once again, this still has some largest market cap stocks in there. We're down massively over the past 2 to 3 months because of all this risk. People are worried about the Fed raising rates. People are worried about, more recently, Russia. And there's a ton of reason to be afraid, right? A ton of reason to sell stocks in people's minds. And in my opinion, it's a bit of a mistake because I think we've already seen a big chunk of this price decrease from the increase in risk. I think that's already happened. That's already fresh in people's minds. They're already worried about it. And I think the more likely scenario is that typically, the risk doesn't typically come true. I mean, sometimes you go through massive crashes, but more often than not, it ends up just being a correction, and you end up moving back up in stock price pretty significantly. So, we'll see what happens with it. But good morning, guys. Good morning, Brazil, Double A, Randy, Boogeyman, Rich M, Heckler Coke, and Lonnie, and Kitchener. Good morning. So it looks like DWAC taking a bit of a tumble off of $90. We're unfortunately moving down just a tad with this one. Still technically green from where we were before the weekend, but we'll see how long that lasts. It looks like some people are wanting to sell some of the news, right? They saw, a lot of traders were potentially entering this in the weeks prior to the launch of Truth Social. And some people might have been of the opinion that, hey, let me buy it up while it's waiting for the launch, and then I'll sell it. And then, that's what they're doing now. So we're seeing a little bit of trading action going on with it. But over the long term, I mean, we'll just have to wait and see how much revenue they can end up collecting from this. But I think they could collect quite a bit, in my personal opinion. That's just my personal thoughts on it. I think they could collect quite a bit of revenue. And they could be doing pretty darn good in the near future. Now, something that's actually doing pretty good today, cryptos. Cryptos are looking not that bad. Bitcoin's up 3.5%, Ethereum's up 5%, BNB up 4%. A lot of these cryptos, some of them are up 10% or more. Terra Luna up 13%, Avalanche up 11%. Shiba Inu, notably, up 8%. I know a ton of people are interested in Shiba Inu. That's an interesting one. It's one that I bought into a while back. I'm not the biggest bull on it. I'm not as bullish as some people are. I wish I'd bought more when I had, because it was rather cheap when I bought it, and I made a decent percentage size gain on the initial buy. I've sold most of it at this point when it was moving up, but we'll see what happens with Shiba Inu. I still hold a little bit of it just for fun, just because you never know, right? You never know. That's my motto. You never know, and you may as well be exposed to a little bit of everything, because these meme coins have really shown that there is potential for massive price explosions, and who doesn't want to be a part of that, right? You always want to be a part of a massive price explosion if given the chance, so you may as well be in just a little bit. I'm not saying that I have any significant amount of money in either Dogecoin at this point or Shiba Inu. I rebalanced my portfolio a little bit as of late. Did some tax loss harvesting on these cryptos towards the end of the year. I guess for Dogecoin, yeah, there was some tax loss harvesting there, but Dogecoin decreased my holdings of it a significant amount. And Bitcoin and Ethereum, I still believe in over the long term. I still think they could do pretty good for various reasons, right? Bitcoin, you got to give it something for being the first. I think that it is potentially becoming more and more of an accepted store of value. We'll see if in 5 years from now, I think it's either going to be way higher than where it's at or way lower. And, it's a risk I'm willing to take. I always think that the upside on these things is much more beneficial to be in on than to be out of worrying about the risk. Because when you're looking at your portfolio, we'll pull up the chart for this also. When you're looking at your portfolio, you can only ever lose 100%. And this is horribly drawn. You can only ever lose 100%. In fact, that's too embarrassing. We're not even going to use that. We're just going to type it out. You can only ever lose 100%. That's your max loss. And there's potentially, during any given rise in stock price, I wish there was an infinity symbol on this computer, but there isn't. You could have a theoretically infinite gain. We'll just use that to exemplify the potentially infinite gain that you could have. Any given time that a stock or a crypto is going up, you could have a potentially infinite gain, and you're looking at a minus 100%. You want to lose everything you invested in it, or potentially make infinite amounts of money over a long enough time horizon. It really could be infinite, right? If the thing just perpetually goes up for the rest of time, even at a very slow and steady rate, it would eventually become an infinite amount. My thoughts on this are that's why it makes sense to have a relatively diversified portfolio. You don't want to put everything into something because you could lose all of it through chance, through whatever event is going to occur, through something that you didn't see coming, through some kind of catastrophe. You could lose everything if you put everything into one thing or even two or three things. It makes a lot more sense to have, 10, 20, 30, 40 holdings that you like in various different things, not just all stocks, not just all cryptos, not just all real estate. Diversify yourself a little bit, because you never know when you're going to hit the mother lode, when you're going to hit the jackpot and get a really big gainer. Probably not this much, right? not at least over a short period of time, but there is always the potential to make quite a bit of money one way or the other, and potentially to lose a bunch, but you always stand to gain more than you stand to lose, depending on your investment strategy. Of course, you could always look at options and say, sometimes when selling options, especially when they're not covered, then yeah, you can make the argument, all right, you've got the potential to lose infinite amounts of money and only make a finite amount. The same situation with shorting a stock. I'll pull this up and we'll talk about shorting for just a little bit. When you short a stock, it's not my favorite thing to do. It's a little dangerous. So we'll just briefly talk about shorting a stock. For anyone who is interested, I say that shorting a stock is a bad idea. Now, my reasoning for this is because of what we just looked at, where you could potentially lose 100%. If you're buying a stock long, you could lose 100% or make an infinite amount. You really flip that around when you're shorting a stock, and you could double your money. You could up 100% if a stock is going bankrupt, right? If the stock goes to zero and you've shorted it, then you could potentially make 100% and you could double your money. Or you could lose an infinite amount. Technically, obviously, you'd be margin called out before that happens. But if you keep putting money in and sticking with the trade, you could potentially lose an infinite amount because there are really only those two possibilities, right? You could, or somewhere in between. It's somewhere in this range. And there's a lot of additional space on this side of the equation than there is on this side, right? This side dominates. There's so much more money that you could lose than you could stand to gain, that from a risk-reward standpoint, it just doesn't make much sense to me, because, you can say, oh, well, I'll set a stop loss and whatnot, and sure, you can do that, and if you want, you can hope it executes and that the price doesn't just jump during an after-hours to pre-market swap or anything like that. And, you can hope on that, but you can really get caught in tough situations when you're shorting. That's why short squeezes exist. That's why, it's somewhat dangerous to be shorting stocks. In my opinion, I typically would never really do it. Maybe I'll consider doing it at some point, but certainly not for the long term. I wouldn't want to be involved in that. I would much rather, if I was to short a stock, do it very temporarily on a day when things look bad. If I do short something, look at the QQQ. For instance, we'll look at this. This is, tech-heavy stocks in this index. A lot of tech-heavy stocks that are also in the S&P are in the QQQ. So this is an ETF that, oftentimes people will like to buy long and trade long. But if I were to short it, if I thought that things were going down and going down in a big way, something you could do is buy SQQQ, which actually is shorting the SQQ. It's a 3 times leveraged ETF that shorts the QQQ. So you can buy it, and that way it eliminates a lot of the risk. There's no reason to worry about, losing infinite amounts of money, because the most you can lose if you buy the shares at $28, which was the low that we had during December. If you buy the shares there, then you don't have to worry about them losing too much value, right? They can only go down to zero, so you're not in too big of a risk. But you could potentially be making quite a bit of money if QQQ goes down, because what we've seen so far is we've already seen a 55% increase from the lows to where we are today in this, because the market's moved down a decent amount. And that should be about 3 times what QQQ has moved down, right? So we saw about, a 45% increase in that. And then from where we were to where we are, we're down about 15%. So it all adds up. So if I were to short something, I would probably do it through one of these much safer methods, through an ETF or something like that, because I don't want to worry about the risk of having a short position in something and then it skyrockets. And, that creates a very dangerous mentality to have, right? Because when you stand to lose infinite amounts of money, it's a worrying thing. And also the fact that you can get margin called on those short positions, because, the initial amount of money that you put up might not be enough anymore if you really stick in the position, but maybe you still believe it's going down. You could stick in SQQQ if you wanted. Now, traditionally, that hasn't been a very good thing. If you look at the max for this, it's gone down dramatically, because obviously the QQQ goes up typically, and you just see decreases in the SQQQ constantly, pretty much. But that isn't to say that there haven't been increases in its price where it's gone up, 30% and has had some big rallies. We just looked at one, actually, right? Where from where it was just a bit ago to where it is now, it's up 50%. So, there have been some big rallies in it. You can see back in 2018, towards the end of the year, we were up 76% just about, or more than that, from the lows to the highs. And in 2019, we had a little boost up when there were some market fears. We were up 80%. So, there is potential to be making money with this over the short term. But over the long term, you certainly wouldn't want to hold something like this, because it's constantly decaying, because the way it does actually calculate the price is based off of put contracts, I believe. So you wouldn't really want to be holding this long. There's constantly some decay in there. And in addition to the fact that QQQ is, if you look at the chart over the long term for the same time period that we just looked at, it is constantly rising for the most part. There are some big decreases, but SQQQ is an interesting method through which you can short things if you're ever interested in doing that. Now, is it a good idea to buy into right now? Not in my opinion, because we've already moved down quite a bit market-wise. I don't know how much further we're really going to move down, and the losses that you could see, right? All it would take, I mean, look at this. All it would take is QQQ moving back up to where we were, back up to around $400, which, sure, that would be a decent move. That would be a pretty big move in QQQ, but it's not something that's unprecedented. I mean, we moved from 350 to 408 in just a matter of a couple of months. We're not that much lower than where we were back in October to the boost that we saw in November. And SQQQ, if you were in that, it would probably be where it's at, or where it was, but even lower, right? It would be even lower than where it was. So you'd be losing quite a bit if we did end up, if you bought in now and we ended up moving down to where we would be losing like 30%. And, how much more are you really hoping to gain? How much more do you think the market's going to drop? Sure, it could go down, and maybe that's the best trade in the world, and we're going to look back at this as if we should all have been jumping into SQQQ because the stock market's looking at an impending crash. We could maybe, but I don't tend to think that's the case. I tend to think that the market's going to recover. That's just my thoughts. And overall, I would rather not jump into a very speculative short-term short position. I'd rather put that money into long-term buys that I'm much more confident in, because I just don't have that much conviction in the market falling. I think that there's just so much money out there that can be used to buy up stocks. And there's an interesting question in the chat that we're going to answer. Ivan says, when you say short a stock, is that the same as buying a put? That is not the same as buying a put. So shorting a stock doesn't have anything to do with options, actually. Shorting a stock, so buying a put is not like this, right? Buying a put is not this kind of situation, because you can gain, if you buy a put, you can gain a whole lot more than 100%, and you can only lose 100%. So it's not like this. Forget this. This is not buying a put. Buying a put is potentially a good thing. So, there are situations in which you might want to buy a put. I'll explain what shorting a stock is for those of you who do not know. Shorting a stock, and this will be a quick 5-minute lesson before we end the stream because we're getting close to the end of the stream. So shorting a stock is when you sell a share before buying the share. So that sounds kind of complicated. I'm going to do my best to make this make sense to anyone who's unaware of what it is, but take a look at the S&P, right? Let's say you wanted to short the S&P. So essentially what you would do if you wanted to short it is you would borrow a share from somebody. Say you wanted to do this way back here, right? Say you wanted to do it right here is where you wanted to short the S&P. You would sell a share on the market, and you would do that by borrowing it from someone else. So someone else lends you their share, you sell it to someone else. Meanwhile, you're paying that person interest. Forget about that. That's not the important part. The important part is that you sold a share right around here. And later on, you then want to buy that share back to get rid of that debt to that person, right? Because you borrowed a share from them, you eventually need to buy a share back to give to them, okay? And you want to do this at a cheaper price. So you want to sell high and buy low. You want the stock price to go down. That's what shorting a stock is. When you borrow a share and sell it today so that you can buy it back tomorrow. And hopefully that makes sense. But you can see if you did that in this situation, then as the stock price was rising, you would actually be losing money. And if you decided to close your short position, in other words, to buy a share back here, then you would be buying it back at a higher price than where you sold it at. So it's basically just the reverse of a long-term investment, right? Typically, you buy a share here and then you sell it here. Instead, you sell the share here and then you buy it here if you're shorting. That's essentially how you would do it. And in this situation, if you shorted from here to here, you would have lost money because the stock price went up. Now, if you just waited a little bit longer, then the stocks would have eventually fallen, the S&P would have moved down, and then maybe you sell or maybe you buy back the share right here. You close the short position, you buy it back, and then you've made money because overall the price of the stocks that you were shorting ended up moving down. You would have made a 2.5% profit just about shorting a stock from here to here. So that's what a short position is for anyone who was curious. And meanwhile, you're paying some interest to the person who you borrowed the share from. Yada yada. It's complicated, but that's the gist. That's how shorting works. Hopefully that's understandable. When you buy a put contract, that's different. When you buy a put contract, we'll look at the put contracts. A put contract is a bit more complex. You're looking at a put contract. Let's look at the $400 put contracts, and let's just say that you're paying the bid, right? Let's say you're paying $35 for this put contract. That gives you the right to sell 100 shares of SPY at $400. So you're essentially paying $35. It's basically an insurance policy, and people trade them as if they aren't, right? They trade them just to see the price increase and decrease. But essentially what a put contract is it's an insurance policy. You're buying the right to sell the stock for a certain price, expecting that it moves down lower than that price. So in this situation, if you were to sell or to buy the $400 puts, you pay $35, you give that to somebody gets that $35, and then if SPY moves down, currently it's trading at $430, if it moves down to say 300, it moves way down below 400, then you've made money on that because you can sell your shares for 400, even though it's actually trading at 3. So you've paid a little bit of money so that you can sell your shares just in case SPY is trading way below that. Now, if it stays above 400 and the expiration date comes around, well, then your put contract is worthless because you don't actually want to use the put contract to sell the stock for less than what it's trading for. You'd rather just sell it at the market. What's the point in using the put contract? It's worthless to sell it for less, right? If you have a put contract to sell at 400 and it's trading at 450, you wouldn't want to use that put contract because you'd rather just sell it at 450 than use the put contract and sell it for cheaper. You want to sell it for more. That's the whole idea. So that's how put contracts work. Very brief explanation. Maybe it didn't make too much sense, but hopefully you guys enjoyed that. And that was the stream for today. we're looking at a somewhat tenuous situation in the markets. Hopefully, we're going to see a bit more green in the next couple of weeks and months. Hopefully, we're going to see our portfolios rebounding. Make sure, guys, though, to hit that link in the description. Look at the locals channel. We certainly post some interesting stuff there. We're going to post a whole lot more. It's free to join, and you can pay if you want to support the channel, but it's not mandatory by any means. So if you guys are interested in that, feel free to hit the link in the description, and feel free to hit the like button on your way out. And other than that, guys, I'll see you at 9 tomorrow. Have a great rest of your day. Hopefully the market doesn't take a turn for the worst, and I'll see you then. Bye, guys.